Take a look at shares of CVS today, down near 17%. That is a new 52-week low. That is after earnings. That's after Medicare was a big drag. In other words, if you see Farmer Jim, Surratt, Jason Snipe, or Amy Raskin today, throw them a little hug.
Yeah, that's my style.
Give them some good thoughts.
Yeah.
Because they all have a gigantic headache today.
I have a question. When I've been on and one of my stocks tank, have you ever suggested anyone throw me a hug?
No, but if you weren't here, maybe I would have. I wouldn't do it right to your face. But like these guys, they're not here, so I'm saying give them a little hug.
Sweet
yeah, you're going to have to be talking to
Very
Joe. Talk to Joe and Jenny and that. That's not in my vocabulary.
We wanted to talk to one of them today. Shockingly, nobody was available.
You want me to take
You know what that means?
They're going
to be, you know what to pay the next time they're on the show. All right, in all seriousness, Pfizer, staying in the space. They beat, Jenny, you own the stock. They raised their outlook as well.
Right. So, it's the same investment thesis, the same argument that I've had all along, which is they just need to get past the COVID distortion. So they beat by 29 cents. They said revenues are going to be exactly where we expect them to be. They actually raised EPS to $2.25. And so what you end up with is a stock with a 6 and change dividend yield, trading at about 9 times earnings. Like, there's nothing spectacular here. There's no glorious story, but expectations are nothing. Valuations are reasonable. You get a 3% lift. I think this is a wonderful company to be in. If you just want to collect 6 and change yield for a very long time and maybe have it grow, I don't know, at like 3 to 8%. That's achievable. Nothing exciting here. Just getting past the COVID distortion.
Okay, so Joe, I use that as somewhat of a vehicle as I look here on my screen to get to Lilly.
Yes.
You sold Eli Lilly.
Yes.
In part of your rebalance at $781.10.
It was purchased in October at $554. The reason is that the debt to equity continues to climb. Would I have preferred that the rules allowed Eli Lilly to stay in the portfolio? Yes. I believe Eli Lilly is a stock that at some point is probably a $900 stock. It basically trades like a biotech. But the rules are the rules. They're written a certain way, and the criteria that we look at as it relates to quality places a high emphasis on what your trajectory is for debt to equity, and the debt to equity continues to rise.
You ever get to overrule the rules?
No, you don't do that. Why would you want me to overrule the rules?
But he just gave me a great trade. I'm going to buy it now and sell it to him at 900.
But wait,
okay, well, when it was 554, you said it was rolling over.
You
didn't want me to buy
it as a hedge now. Okay. You're going to buy it because you're in the JOET. You buy it now as a hedge.
Yeah, good point.
Can I say something on Lilly? So,
sure.
We have a lot of individual clients, and a lot of individual clients come in with like really big legacy positions in Lilly. So I think a lot of the viewers probably struggle with that too. Like, what do you do with this? And I think, and I actually, where I could, trimmed those legacy positions earlier this year, because what you've got is you've got a stock that's doing extremely well, but it's trading at many, many times the multiple of all of its peers. And I think that there is risk there. Like, if there is real competition in their GLP-1 drug, that stock could lose like 10 multiple points, 15 multiple points, kind of in a blink. So I think this is where like you really actually focus on the valuation and worry about that, as compared to the wonderful, like, oh my God, GLP-1s are amazing story, which they are.